Share screen. All right, so I sent the PDF in the room. If you guys want to follow along with some of these links, because there is good stuff in these links. So today we're talking about yield farming versus staking. They sound like the same thing, but there is some pretty substantial differences that you need to understand, especially if you plan on doing either one of them for a long period of time, because the outcome may be completely different. So this is a link right here to actually the Binance Academy. They have a lot of really good in-depth articles that you can read. Like I said, I don't mean to make any of these like extremely long talking about one subject, because everybody has the same access to the internet that I do. That you can, if you want really in-depth stuff, I'm not that person. I'm just kind of going over all this, opening everybody's eyes to all the possibilities that are out here. So this is a good link to go reference for specifically BNB, but most of it is carried across all the chains. We've already carried all the covered all the different chains and what's so special about all of them, or why you'd want to use them. Mostly fee related. But all right, so this is yield farming. So yield farming is when you're creating liquidity in the market for the purpose of trading between two currencies. So pretty much this is a really good little just picture. So that if you were going to provide liquidity in DAI, which is a stable coin tied to the US dollar, and Ethereum, you are putting these two tokens together and you're saying, here you go, I'm giving you $2,000 worth of liquidity. And what that does is that's for most of the exchanges to trade back and forth between. So impermanent loss is something that you have to be aware of, because it is a real risk or real reward in a bear market to be in and to have liquidity tokens. Okay, so be providing LP. It kind of works as an equalizer. So whenever as this picture right here shows, the in this particular instance, the value of Ethereum went up and DAI stayed the same. Okay, so one went up. I hope you guys can see my camera. But one went up, Ethereum went up, and DAI stayed the same. Okay, so whatever goes up, you lose some of when they're trading back and forth, because you're pegged at the price that you entered at. So I entered here, and as it goes up, when it's trading back and forth, I'm losing some of this higher one. So there's a lot of impermanent loss that can happen when you're trading with a stable coin, because you are pretty much almost betting that the other token is going to stay the same, or you're willing to not make as much money as if you were just holding the actual asset. So if you click on this link right here, he's got like a 10-minute long video, very good video showing you illustrations of what I mean, because it sounds complicated. It's not as complicated as it sounds in a shorter term, but when you watch this video, you'll probably have a better understanding. So when you're staking two things that are constantly moving in value, the impermanent loss can become a lot more substantial. But in a bear market, when things are going down, it can save you a lot of money. So say Ethereum drops 30% and the other one is, say, BNB. Okay, you got those two together. If Ethereum drops 30%, BNB only drops 10%, you're at 50. If you've got 50-50, half and half of the money in there, you're going to equal out to about 20%. So if you'd have been holding all Ethereum, you'd have lost 30% of your value that day. Or if you've been holding all BNB, you would have only lost 10. But since you're holding both of them, it equalized. Now the same thing happens when they go up. If they both go up, and you're exponentially gaining the whole way up, but the one that went up more, you're not going to make as much as that one went up. So it's kind of a risk avert asset is the way that I look at it. Whenever I see that we may be coming into a big dip or big pullback, it's not a bad idea to put it into LP, because you've got two different assets, and if one of them drops way harder than the other one, you're going to equal out to a net positive compared to holding that one asset drop over, and you don't know which one's going to go down all the way or which one's going to go up higher. You don't know that, so it's just kind of a risk avert asset to have. Okay, so that's yield farming, and usually it's for exchanges, so they want liquidity in the market. Every exchange wants liquidity. That's what you're seeking out to get investors to come work with you, is if you have liquidity. So the more liquidity you have, the more likely people are going to come trade with you because the spreads are smaller. Everybody, it's a win-win for everybody. I teach you guys all this in Forex all the time. We talk about it all the time with brokers, stuff like that. So that should be common knowledge now. Liquidity is something that you want. So there's different projects that have been successful, and there's some of them have been failures, and especially recently have been failures. So one that I want to cover right here is PancakeSwap. So PancakeSwap is that's the exchange we use on Binance Smart Chain. I've already got it open over here. So this is a LP farm. So all these pairs right here are what you can stake and get an APR. Okay, there's APR. Most other sites are APY, which is annual percentage yield. So this is a little, it's calculated a little bit differently, but they both still will make you money. And if you look at the APR is somewhat, you think it would be somewhat low on Cake BNB, but this multiplier is a big deal. So if they have, say, 100,000 Cake that they're releasing, okay, they're paying you. I'm sorry. By the way, any one of these pairs that you stake, you're going to be paid this APR in the native token to the exchange. Generally, not always, but generally. So here on PancakeSwap, their native token is Cake. See down here in the bottom left corner, it's $35. It was much lower than that not too long ago. I remember when it was like $12 when it shot up like a rocket and got to $12 from like $1. So I mean, there's people that are up. You know, if you bought it at $1, you're up 35x money. And if you were providing liquidity, you were getting free Cake for providing liquidity in any one of these pairs. You were getting Cake, and then your Cake was going up in value also. Could have made a killing. Okay, this is an example of a successful farming operation. If they have, say they're giving out 100,000 Cake a day, I'm just going to use this roundabout number. 40,000 of them will go to this pool, and then 8, 1, and so on and so forth. So even though this number right here looks smaller, the amount of Cake that's being given to that pool is much larger. So you would still end up making more at this one than say this one right here that's 308%. Okay, I'm not going to go through all the math, but if you don't believe me, you can try it out yourself, or you can break down the math. But I mean, the amount that's going, you've got a chance to get, you're splitting 1,000 Cake with all these people that are in here, 7 million. Oh, here they've almost, I mean, sorry, yeah, 7 million. Here they've already got $1 billion worth. I may be a little off because you're more than 40 times. It would be close. That's why I apologize. That may not have been the best example. Maybe something like this right here with a low APR. You're going to get a lot more here than you are here, even if this APR is higher. So, anyways, this is a successful one. Okay, so an unsuccessful one, one that actually just pretty much went belly up, would be value. So I posted this August of last year in the room when it was YIB, and I've been holding it, and it was like $15 I think at that time, and it got all the way down to $1. Obviously, that's very unsuccessful for people like me that held long term. When we first got in, it was $11. It shot up to $80, and we were making like 1,000% APY. It was insane. We were getting so much free that it was just like we thought we were in heaven. And then come to find out that the whales, mega $1 million accounts, were doing the same thing, getting all this for free, and then they just decided to sell them all. And as fast as they were getting them, they were selling them, and they just tanked the market. They were actually just exploited. One of their contracts was Saturday, I think it was Saturday. So I had a decent amount of money in there, 4 digits, and now I'm down to $5. That's the risk. Remember, I'm not going to paint everything as rainbows and unicorns all the time. I'm going to be blunt, honest, to the point. Not everything is going to be honky dory. There are scams. That's why I went over safety in the very first one that we did. Safety, scams, spotting scams. I do not think the value DeFi is a scam. I don't see them as a scam at all. It was just very unfortunate that they have had their contracts audited. That means professionals have looked at it. Even the professionals messed up. Nobody's perfect. all the pools that weren't 50-50 ratio, like I just talked about on this slide right here, how a 50-50 ratio is how most of them, if it wasn't a 50-50 ratio, these hackers found a way to exploit the contract and drain all liquidity. They stole $11 million. On Saturday, somebody stole $11 million from hardworking people like me all over the world. That's just the world that we live in. Things like that happen. That being said, rule number one, like I said from the very beginning, I've always said this. Rule number one in investing or trading, any kind of money movements in your personal life, never risk more than you're willing to lose, period. I lost all the money in there, didn't lose a wink of sleep. I had enough money in there that I felt comfortable, I felt confident, but I never over leveraged myself on one project because you just never know. Everything in crypto is new, it's all revolutionary. There's constantly things that are changing and moving, and if they change a contract and they miss one semicolon, it could be catastrophic. So just keep that in mind. I'm not here. I don't want to scare anybody out of doing any of this stuff, but try to stick with things that are tried and true and proven. And in all honesty, Value DeFi was one of the things that's been around for a long time. But it happens. Moonswap was another one that was, I say, very successful in here. It depends on how you look at it. Love actually got in on this with me in the very beginning. We got in when Moonswap was $2.50, somewhere around there, and Ethereum was like $300, something like that. So I mean, Ethereum was way down, Moonswap was way up. I put 2 Ethereum worth in, and then I had to match that much money in Moonswap. So 2 Ethereum that time was $600. I had to buy the same amount of, I had to buy $600 worth of Moonswap, 50-50, pair them together. That's $1,200. I put it in there, and we watched Moonswap go from 250 down to 10 cents. Crashed. The APY was high. We were earning a lot of Moon, which was the native token for that website. But we got a lot of them. And when price all the way down to 10 cents, I personally, I was doing stupid stuff like buying NFTs with it, and I didn't care because to me, it was just like, who cares? These things are 10 cents. And I was getting like, I don't know, 60, 70 of them a day. I mean, literally like 60, 70 of them a day. Now the price is back up to, it got up to $1, back up to like $1.60 or $1.80, something like that. So, I mean, it got all the way back up. And my personal value in that liquidity was about 5 times what I gotten in. Now, that being said, my LP value was 5 times higher, but Ethereum started at $300 when I got in and is now at $4,000. At that time, it was about $2,600. So we'll call it 3,000 to be round numbers. So Ethereum had gone up 10x, but my value had only gone up 5x because Moon went so far down and then it was coming back. Now, I'm talking to you in dollar value because they equal out. The equilibrium equals out. I started with 2 Ethereum in the pool, and I had like, I think it was like, what? I'm gonna kill myself with this math, but like 3,000 Moon or something like that. Okay, so a 300 Moon. Yeah, $2 a piece, $600. So 300 Moon. So 2 Ethereum, 300 Moon. When Moon went all the way down to 10 cents and Ethereum took off to $2,000, I had like 0.09 Ethereum left and like 9,000 Moon, because that's how far the value had shifted. Moon had plummeted from $2.30 or whatever down to 10 cents, and Ethereum had took off almost 10x. So that giant swing, the Ethereum is what saved my value. I didn't lose money. I started out 1,200 and my value was going up. But my assets, if I were to have pulled out, I would have had 9,000 10-cent Moon and 0.09 Ethereum, worth like $3,000 or whatever. So like I said, overall USD, I gained, but I lost so much of my valuable asset and I gained a buttload of my worthless asset. That's how impermanent loss works. So if you're in it for the long haul, you need to be in it for the long haul, and your expectations are that both of them are going to go up and it's going to equalize to where you end up profiting overall. So that's yield farming. We were gaining Moon the entire time. As I'm talking about the LPs, I was also earning. I think I earned, I don't know, a couple thousand Moon. I mean, because I was raking them up when price was down low. That APY, I was raking them in, getting them for free. And then as price went up, I had all this money left over in Moonswap, and I was selling them off into other assets, Ethereum or whatever else I wanted to, and getting it off of there. That's yield farming. Okay, so you are staking your own assets, looking for yield and a return in the native token. That's yield farming. Okay, we went over impermanent loss. I recommend that everybody watch that video. It was very good. I watched it right before this. I actually added the slide within the last, I don't know, 10 minutes before we started this. Okay, so staking. So staking is usually where you don't have to use two different tokens and pair them together to make liquidity tokens, or LPs as they're called. You're just taking the one token that you bought. And you take that one token and you're staking it to either receive more of that token or perks with the company. I should have done some of these other ones like Trust Swap. Trust Swap is one of those launch pads that we talked about in the last video. The launch pads where you can get brand new projects that are just coming out, like Polkastarter was another one that I think I listed in the last one also, where you can find how I find new projects. Those two places, you have to buy their tokens. So Polkastarter, right now it's up to like, you have to have like $10,000 worth, and you have to stake that with them to get access to those new coins before everybody else does. You get in at the lowest price, rock bottom, where it starts at when the day they list it. That's staking. And you don't have to have different tokens to do it. You're just buying their token and you're letting them hold it. So the purpose of staking mostly is to create a more stable environment, a more price environment, because obviously less people that are trading it, buying and selling it, selling it, selling it, buying and selling it, the more, volatile prices. If more people are just buying it and holding it, then it's a more of a steady upward tick, kind of like we see in stocks. Most of the time you see stocks, they're buying a stake in the company and they plan on holding that stake for as long as possible because they believe that the company is going to continue to rise. Like buying Apple at $40 years and years ago. You bought a stake in that company and you believed in Apple that it was going to keep on going up and up, and it did. Staking is kind of the same thing. You believe in that project, that token, whatever they're doing, you buy theirs, and then they reward you for staking, like stocks do with dividends. You can think of it, dividends, as the staking rewards for buying stocks and holding them. Apple does it. I used to hold Lyndale stocks. They give you money back. That's kind of the reward for holding on to their token and believing in it and staking a piece of your money in their company. Okay, Polkadot is a great example of staking. I've called for everybody to buy that back $4 or $5. Now it's in around $35 to $40 range, and you can be staking it and earning it in a return in their token for staking it. Now it's really, really high. I mean, it's like, I think you have to have like 250 of them. That's a lot. That's over $10,000 worth to be able to stake now. So that's kind of come and gone for most people. Tezos is one that's on Coinbase, and you just buy it and you hold it in there, and that's considered staking, and they pay you a reward. You can watch that thing live. It's pretty cool. If you're just getting into this and you can open a Coinbase account, buy a little bit of Tezos, $10 worth. You can watch. It'll be a far decimal point out, 100,000th of a decimal, but it'll be constantly counting, showing you that you're earning for staking just for holding that token. It's kind of the same principle as a bunch of these other ones have. The Token Kennel is a new project on Binance Smart Chain that I actually have bought a little bit of myself because I believe in what they're doing. They actually penalize you for trying to bail out early. What they say is they're trying to turn tissue hands into diamond hands. So the people who buy, and once it goes to get some profit, they get rid of it as fast as they can, and then they miss out sometimes on exponential gains. Sometimes it's a good move, but it's kind of to stabilize the tokens that you're buying. And so they've got a bunch of them listed on here. They call it boarding. So like this is the actual their kennel token. If you stake it on here, when you stake it, they charge you a fee. So you actually lose 10% when you stake it, and then you lose another 10% when you pull it out. It constantly compounds, so you're relying on this APY up here to cover it. Obviously, that being said, you have to hold it for a certain period of time before you'll overcome either one of these fees from where you start. So that's what the motivation is here, is to get people to stake it. You'll get rewarded. If you plan on holding for a long time, why not? If you don't, then don't do it. Period. You don't get the rewards. That's just how it works. So this is staking, and these are all the native tokens. Whatever it says up here, whatever it says up on top, you can go buy it. So Fox, Saturn B, and they've got a link on here to go buy it at WinSwap, which is a new up and coming exchange on the Binance Smart Chain. I don't know if this one's been audited yet, so none of this is financial advice. Again, I probably should have started with that. None of this is financial advice. I'm not telling any of you to buy any of the things that I buy into. That's why I thought I made it pretty clear with the value DeFi. I personally lost quite a bit of money in that. It happens, and that's been audited by professionals. So everything is at your own risk. I'm just opening everybody's eyes to all the opportunities that are out here and what you can make of it. So NFT projects that are promoting staking. So NFTs, we covered it a little bit last time. You know, that's art, music, videos. There's all kinds of different NFTs that are out there. And some of them allow you to stake token to get rewards, which is would just be considered staking. And there's actually some that are allowing you to start staking, or they're working towards being able to stake your actual NFTs. So Make FUD is Don't Rug Me. The name of their token is FUD. And you can click on that link in your PDF to join the room and just check it out. This is a Pokemon executive that worked on the Pokemon Online project, the actual Pokemon Online, who came over to crypto. And when this token first started, if you just held the FUD in your wallet, they would use Etherscan, which I showed you guys how to use last time, to go look for anybody who's holding their token. And depending on how many you were holding, they would send you different levels of NFTs. When gas, I don't know if you guys saw the post today, and I think I put it in the main room. Gas prices are stupid, insanely high. Today, it would cost you upwards of $350 to make a trade on Ethereum one way. So if you wanted to trade something today, buy and sell it, you're looking at $700 loss just in the fee. So Ethereum has become mostly a whale-only chain. That's why I've been talking a lot about Binance Smart Chain. That's why I did all this, because some people I introduced to Ethereum back last year that now are saying I can't afford it, and I don't blame them, because I try to stay off Ethereum as much as I can. But anyways, they've actually they moved towards Unifty, which is where we end up paying the gas, but we stake our FUD on there and we get NFTs. Unifty has got a bunch of different projects where you can stake their native token and earn points that you can redeem NFTs. They've got XDAI. They've got more chains than I've even explored. Celo. They've got Matic on there. They've got Binance Smart Chain. We'll click on that in a minute and go to it. But this is another one that I'm personally invested in. Not financial advice, but FMG.art. You can actually, they call it mining. Okay, there are some projects that call it mining. Like, I don't know, a bunch of you guys that are actually on this call aren't doing the Pi mining that I've been doing. It's not technically mining. You're not actually cracking any codes or creating it. It's kind of just like earning, staking. And Pi, you're just donating your time, and they send you an ad, and I'm sure they get paid for the ad. That's how they're paying you for that. And this is where I've actually bought the FMG Ethereum. I made LP 50-50. I took FMG, I took Ethereum, I paired them together. I made LPs and I staked them on this site. And because I don't have my wallet connected to it, I think, and this isn't my main wallet. So I'm earning FMG on this one. And this is just another way to stake. This is more staking, but this is NFT related staking, which, you know, I strongly believe the NFT is future. This is just art. So as far as utility goes, it's not that much utility, but to me, the art is amazing. As you can just see from just this one picture right here, all the art on here, super awesome. But this is just more NFT type stuff where you can actually stake the tokens and earn stuff towards NFTs. So anyways, it's taking too long to get to that. So Unifty, I'll just open it up real quick. And then also that last link is if you want to look into other NFT projects, you can filter it on CoinGecko. I've already got the filter applied on that link that I put in there. And you can go look at all of the different NFT projects that are on CoinGecko, and you can look at their market caps, and you can decide whether you want. And they've got links, and inside CoinGecko, it's got links to their telegrams, links to charting, links to the exchanges you can buy it at, links to their website, links to Medium. Medium's a media that a lot of these coins use to promote their news and show and give like a news updates, their announcements, I guess you could say. So this is Unifty, where you can buy all these tokens and stake them. And there's even more, like FUD is one that's not even on here. I think I put the link in the PDF if you guys wanted to connect this link right here. If you click on that, it takes you to the FUD farm, and you can see what kind of cards that are in there and the art and all that kind of stuff if you wanted to get involved in that. I think that's it. We've got a couple minutes left. Anybody got questions on what we've covered? What was in here? A couple people in here. Anybody's got any questions? We got 8 minutes. Take advantage. Anything that we've covered in the last videos too. If you haven't got your wallet set up, we can try to go over that real quick. None? Man, you guys are
nothing right now for me.
I don't know. I find it hard to believe I've explained anything that well. I kind of feel like sometimes I need to go back on myself and ask myself questions.
I have a question.
Okay.
Can you hear? I hear that with farming, you can lose money.
Farming, you can lose money. So when you're okay, so like I just said, when you're farming, you're yield farming. Okay, so this goes back to the impermanent loss. Okay, remember, like I said, in my situation, Moon went down, Ethereum went up. Had Ethereum gone down, both of my assets had gone down, I would have lost money, just like if I was holding the token straight up. Not only that, but then the farm token that you're receiving, if it is being over farmed, if they're pushing too much volume out, people are selling them because nothing is free. We all understand that. Nothing is free, right? In life, nothing is free. Okay. When you're receiving these tokens, you're staking your assets to get these. As soon as you get them, somebody else put another asset tied there. Somebody else is farming the same pool. So, like for instance, that cake. Okay, so cake. This cake BNB right here. There's $1 billion worth of liquidity in it. So people are putting up their BNB for that cake. The more BNB they add, the more value cake has. If it was the other way around, they were pushing too much volume out and demand was so low that it wasn't meeting the demand. I mean, it wasn't meeting the volume that was coming out. Then people would be selling that cake as fast as they got them because it's free money. Literally, that's the way people look at it. It's free money. Now it's maybe free money to you if you're staking BUSD BNB. Your cake you're getting, you can just sell it. As you can see, they've got a much lower APR, a much lower multiplier, and almost $1 billion in it. These people right here are getting an asset that they are not invested in. They're not invested in cake, so they don't care if it goes down to a penny. They're earning it every single day, and they can be selling it as fast as they're getting it, unless they see value in it. If they see value in it, then they're going to hold it, and they're going to stake it, and they may end up making their own cake BNB. You can take the asset that you're receiving, pair it with some BNB, or sell half of it for BNB, and then pair it, and then earn even more. So they can be earning cake in any one of those other pools, sell half their cake for BNB, and then pair it, and then they're reinvesting their earnings. So you can actually compound your earnings that way. But like I said, yes, you can lose money. For instance, that value DeFi, the one that I lost my butt on, whenever it was tanking, I was buying more of it. And as people were getting more of it for free, they were selling it off. So the liquidity that I was putting in when I was buying more, I was buying it with my Ethereum. I was buying value with my Ethereum. They were selling their value for Ethereum. So the value pool was getting bigger, the Ethereum pool was getting smaller, and the dollar value of value, sorry, that sounds confusing. The name of the token was value, was dropping. So yes, you can lose money farming. And that's something you need to know. That's why I made sure impermanent loss was covered, because that's where you lose a lot of money also. I recommend watching the
Is that
video. He covers it in better detail.
all already? Is that the same as that liquidity mining?
It's pretty much this. Most of the time, yield farming is liquidity. So this is an exchange. Pancake Swap is an exchange where for them to have a exchange where I go here and I hit exchange. Look, so any one of these tokens, okay, for them to be able to have an asset for me to trade for, they have to, somebody has to give them both these assets. They didn't just create them or buy them themselves. You know, I mean, I guess if it was a multi-million or billion-dollar industry that they could just buy their own liquidity and then trade their own liquidity, that would be one thing. But almost all of the decentralized exchanges, people provided their tokens to them for a return, Uniswap included. Uniswap is the massive one on Ethereum. Pancake Swap is the biggest one on Binance Smart Chain. These started with practically nothing. They started with Cake. They started with their token that they made up. They made up a certain supply, and their value was mostly in the product. So people were buying Cake based on the value of their product, and then they started investing their tokens in it to receive Cake because they saw value in Cake. So for me to be able to click on any one of these other tokens, somebody had to put it up, whether it be the people who listed the token. Like say this Alice, I don't know what it is, never heard of it before. They may have raised BNB whenever they started their project with a pre-sale. So they say, okay, anybody who wants to get in early for 1 BNB, you get 1,000 tokens. That's the pre-sale. And then they'll get, they may earn 40, 50 BNB. So then they'll take those BNB they earn. Usually most of them will keep a portion of it for themselves for their work. And then they'll like say that they earn 50, they'll take 40 and they'll pair it with their brand new token that has no value essentially when it starts. They'll pair those two, make LP tokens, and then they list it on the exchange. So that's how they start. And that's what the LP tokens are for, is for exchanges. Because everywhere you go to make an LP is an exchange. Right here where it says liquidity. So this is how you make it. You hit on add liquidity, you choose the two tokens that you want to put up. So like on this particular account, that's not connected. On this particular account, I have Cake. Oh, let me change it back. So it'll remind you too that you're on the wrong one. So there you go. Now I'm back on here, and it's probably going to pull up that I have some Cake. Okay, so here we go. I have Cake. Now I can put. I have a lower. I know dollar wise. I have a lower amount of Cake. So if I hit max here, it automatically tells me 50-50. It pairs them. I would hit approve Cake. I'm gonna do it because it's like, I don't know, $6 or something like that. I don't care. For the purpose of this, you're watching how you make liquidity. First, you have to approve it. This is normal. You approve it, hit confirm. And then it'll send it off to the blockchain to get approved. And then when it comes back, I hope I don't run it. I've got less than 1 minute left on this thing. The next step is just, it'll say supply. The supply button will light up. I hit supply. It'll ask me again if you want to approve it. I'll approve it. And voila, I have LP. Then I can take that LP and go back to the farm and stake Cake BNB in that top one. That's how you make LP. That's how you start farming. All right, guys, like I said, I think we have less than a minute. We can continue some of the questions if you want to type them in the main chat. Or maybe I can do just a Q&A on Wednesday if you guys want to, but that'll be all for tonight. Trying to keep these videos short. I hope you guys learned something. And like I said, if you have more questions, hit me up over there.